Hi, I'm Ryan Guina, the founder of the Military Wallet. I'm joined today by Ryan Bell. He has over 20 years experience working in VA loans, and he has also served in the Army National Guard. Welcome to the show.
That's right. Thanks, Ryan. Thanks for having me.
Why don't you tell us just a little bit, 20 years, a lot of experience, tell us a little bit about what you do, and then we can talk about the VA loans once we have it, talk about refinancing and go from there.
Sure. Well, I started off originating VA loans, and that's where you get to educate the veterans and the service members on their benefits. You hear out their goals. What can we do to help you use your benefits to achieve those goals? Make sure you qualify. How much do you qualify for? And then once the veteran gets pre-approved, they take that pre-approval letter, they go home shopping, and then my loan officer helps them use that pre-approval letter to get the home that they pick out. So really I'm on the front end. I like to call it the tip of the spear, loan origination. So I did that for about 8 years, and now I'm in support of those originators. I manage a team that welcomes those veterans into our company and just educates them on their benefits and making sure they're set up for success.
Perfect. So we've got that process. We've got our veterans are educated. They've purchased their home. They've been living in it for a while. Now, as we all know, part of that buying process and part of the purchase price is the interest rate on those loans.
Yep.
So interest rates vary and they can change by day. Now, let's say I bought a house a few years ago and the interest rate was 7%, and today interest rates are lower. Now, we want to talk about what happens if they're lower today, and is there anything I can do to save money? We hear about refinancing. Can you tell us what that means and how we can do that and what the impact is?
Yes, so I'm glad you asked that. This is like the hidden gem of a service member's VA home loan benefit. The home loan benefit is a hidden gem in your service benefits on its own, but what we call the IRRRL or the Streamline, or some people may have heard it called the technical term interest rate reduction refinance loan. Basically the same thing. And when rates drop and you're on a VA loan, you can refinance your home loan, or I call it reclose that loan at the lower rate. If there's a tangible net benefit, meaning it actually benefits the veteran in a meaningful way, the VA will let you do a streamline. And that is where, let's say I'm at a certain percent and rates drop 0.5% or 1%. And it saves me X amount of dollars. As long as I've been in that home over 6 months where there's some seasoning, and as long as the home loan is in good standing, then I can refinance in a lot easier way than a full documented refinance that civilians have to go through, or what I would have to go through if I were on a conventional loan or an FHA loan. The VA Streamline, it's much simpler, and over the life of the loan, if I can just keep streamlining my rate down, could save me tens of thousands in interest. So it's pretty cool.
Yeah, so my wife and I did this. When we bought our house, interest rates were lower than what they are now, so I don't want to quote what they are because, like I said, interest rates can change every day. Let's just use a hypothetical. I said 7% earlier. So we'll say if you got a mortgage at 7% and you've had that, you've made at least 6 payments on it, I believe is what it is. So
Yep.
your loan is seasoned. And over time, the interest rates have dropped. Now, let's say it's gone down to 6.5 or 6%. I say, you know what? If I were to look at my mortgage and have the amount that I have outstanding on my loan and refinance it at this rate, my mortgage payment is going to drop every month. So that's
right.
That's very attractive to me as a home buyer.
That's right.
And as a homeowner. How do I take advantage of that? What do I do next?
Well, what I would do is, to be a smart consumer and just a homeowner, you always want to keep your eye on rates, because if you have that streamline benefit, you're just going to want to be knowledgeable where rates are. Maybe I can refinance my home loan down a point and it saves me X amount of dollars a month. And like I said, over time, that compound interest could add up to be thousands of dollars. What you can also do, let's say if you take out a 30-year VA loan and you've been in the home 2 years, making your payments on time, rates drop an interest rate point or 1.5, whatever it is, you can refinance again or refinance to reduce your interest rate and make it a 30-year loan again. Or you could say, if I'm saving, say, $100 a month in interest, what if I move it down to a 20-year loan? And now I'm shaving 8 years off of my mortgage and my payment might still be about the same. Maybe I move it to a 15-year term. You can do that on a Streamline to where you have the ability to choose, do I want to go after the monthly savings or the compound interest savings over time, or do I want to shave some time off of my loan that I currently have, and maybe my payment goes up a little bit, but by reducing the rate, you're able to mitigate how much your payment goes up compared to what you're paying now.
And those are great options. So one of the things a lot of people try to do is pay off their mortgage over time, hopefully to have it paid off by the time they retire, for example.
Yep.
Okay, it sounds like if I'm going to do this, I could go online and play with a mortgage calculator, or most loan originators are going to be able to run some options with me, right? They should be
Yep.
able to help me run those numbers and help me compare what my options are. Can you walk through what that looks like?
Yes, options are great. So, what you wouldn't want to do is just stop at an internet search. A lot of folks do that. They'll just pull out their phones or their mobile device and do a quick search. Well, all of the advertising on there doesn't know your credit situation, doesn't know anything about your loan. So you most people will contact the lender who has their loan currently, and then maybe pick two other lenders that you think are reputable or maybe do a good job for you who are competitive. I would make sure they're all on the same level playing field, because I would talk to veterans who might have an offer from this lender who has all their full everything, credit situation, debt to income ratio, value of the home. And when you go to shop the interest rate they're offering you, it's tough to get an accurate comparison if you're just calling the other lenders or visiting with another lender and saying, well, I don't want to give you any of that information, but can you beat 6%?
Sure.
So put them all on the same level playing field. Put their offers down on the dining room table and look at not just interest rate, but closing costs. I'm big on customer service as well. Who's returning my calls, my texts, who wants to earn my business. So there's a lot that goes into it. A lot of lenders can put together options for you, even within their own, just what they have to offer you. You could streamline refinance your home with what's called a par rate. You could purchase a lower rate from most lenders. Sometimes you can get a credit at closing. So I make those lenders give me options. And so that way it isn't just like, well, give me one option. I want like three from three different lenders. And then I'm kind of going shopping. And I can pick the lender and the deal that's best for me and what I'm looking to do.
I think that's a great option, and that's what I always do as well. When we were buying our house, we worked with our real estate agent, and then the real estate agent said, here's our preferred lender. You can work with them if you'd like. So I called them and got some quotes, and I called several other lenders that specialize in VA loans. And I talked to all of them, did the same thing, got multiple quotes, looked at the 30-year, the 15-year, the different terms,
Yeah.
buying down points. So all that was good. I'm a nerd, so I dropped it into a spreadsheet. My wife was like, how do you do all that? Well, that's just how I think. But so that's what I did. Now,
Yeah.
when it came time to refinance, I did the same thing, but I looked probably two or three different companies, and one of them, he was somebody that I had met, and he actually just happened to live in my neighborhood. But he walked me through this and said, here's what we can do. And the Streamline process was so easy.
Yes.
Can we talk about that and what the borrower needs to do and why the Streamline is such a great deal, but why it's so easy?
It is. Yeah, I'm glad you brought that up. So, and it alludes to what I was mentioning earlier. A lot of refinance loans are full doc loans where you need to get another appraisal. You need to prove your income again, all of your assets, everything you did to purchase a home, you need to do again when you refinance it on a lot of loan products. Well, on the VA Streamline, the VA and your current lender especially, really any lender, they're going to understand you already have this home loan. And it's on a VA. It's backed by the government Department of Veterans Affairs. You don't need to do another appraisal. You don't need to verify your income again. You don't need to verify assets. Unless that particular lender just wants to do that or needs to do that, you're not required to do any of that. So it's a minimal doc loan, which typically means it'll close a little quicker. It's going to save you on cost. You don't need to pay, X amount of dollars for an appraisal again. Now, sometimes if you want to reduce the term, say go from a 30-year to a 15-year, the lender will want to make sure you could still make that payment, and they'll want to verify you have a job and are you, what your income is to make that payment. But those are kind of unique situations or circumstances. Most of the time, a Streamline is a very minimal doc loan, which saves you on time, saves you on cost, not much headache at all. And that's why I call it kind of the hidden gem of all this. And I'm passionate about making sure veterans are educated in it, because you could buy the home and it be at a certain percent. You can be in that home a year or two, rates drop, you can streamline it down. You can do it again. You can do it as many times as you want. And the funding fee on a Streamline is actually less than when you purchase the home. It's only like currently 0.5%. So there are minimal fees compared to when you first purchase a home or if you had to do a conventional FHA.
Yeah, I found the process to be super easy. When I called the lender and we spoke about doing the Streamline refinance, he said, "Look, I'm going to need this, this, and this from you. I can go pull your COE, your certificate of eligibility." And I don't know why you had to repull that, but I guess that's just a document. But they didn't have to do another hard credit check. They didn't have to do any income checks. Basically, it was, I'm going to draw up these papers. We're going to do this. Here's your new rate. I'm going to send it to you via DocuSign. So I didn't have to go anywhere. I did it all at home. Didn't have to go into a closing office or anything like that. We signed everything, shipped it back, and then the next thing I knew, I had a much lower interest rate, and we were paying a lot less. And we were in a decreasing interest rate environment. So this was post-COVID when money was flowing a little better and interest rates kept dropping. So I did my first Streamline refinance with him, and then I was talking to a friend that I had recommended to him, and he refinanced as well. And then I was talking to my friend, and I said, "Hey, how long has it been?" He said, "I think it's been about 6 or 7 months." So I called the loan officer up. I said, "Hey, when are we coming up again?" He said, "Actually, I had you on my list to call on Thursday." This was Monday or Tuesday. And he said, it's been the 6 payments will be here. We can start that new process again. And that's exactly what we did. We did the same thing, rinse, repeat.
That's awesome.
And ended up dropping about 1.75, I think, from the original purchase price. So I have a really low interest rate. It's locked in. It cost me nothing out of pocket to do it. And it was super, super easy. So tremendous, tremendous opportunity if your interest rates are dropping lower than when you purchased. Now, all of this sounds great. How do we actually do this? What is the first step that a buyer needs to take to do this Streamline refinance?
Sure. Really, I mean, there isn't a rule saying you have to contact your current lender. Any VA-approved lender can do a Streamline. That's where most people start. Because if you've already worked with this bank, if you like that bank, you can see what rates are that they're offering, and you can see where you're at, and like you did with your lender, and do I have the seasoning? What are rates? Does this make sense to do? I still recommend people to always shop around, just because the rates are all born out of the mortgage bond market, and they're going to be pretty similar. But you might have, maybe it's an eighth or a quarter difference that means a lot to you between lender to lender. So I would still shop around if you find it's worth it. Now, if you're busy and you just don't want to do that and you love the bank that you're with, that's okay. But the first step is just reaching out to the lender to say, here's my situation. How can we better my situation? Or can we, through the VA Streamline, given where my current rate is or where my rate currently is and where current rates are in the market? And they'll go over all that with you. I mean, that's what they're there to do. My team, and I think most lenders out there, they're happy to have that conversation. And if it makes sense to do, great. If it doesn't make sense, you'll normally know within about one phone call.
Okay, yeah, that makes perfect sense. And then the mechanics of the process, as I mentioned, was super easy. We did everything online. You may have to go sign documents. But, I take that back. Instead of DocuSign, that might have just been the permission to start the process. I think we may have actually had a notary public come out to our house and we signed it. That might have been the process. But we didn't have to go anywhere. It was just as easy as it could have gone. It was great.
Yeah.
Now, one thing that happened to me, and it's probably happened to you because you have a VA loan as well, right?
That's right.
Okay. Closed my VA loan. And as soon as I did, I start getting all these letters in the mail, and it looks like it's coming from my lender. They're like, XYZ, VA loan mortgage, and it's our attention this with this fake account number on there, and they're trying to get you to open it. You open it, and the first thing you read is you can save this much money, and they're trying to get you to refinance through them. Can we talk about how these, for lack of a better word, sometimes some of these are flat out scams. Some of them might not be scams though. They might just be trying to get your business. Can we talk a little bit about these, like how to avoid getting caught up in something you don't want to get caught up in?
Yes, I love that you're bringing that up. I think people need to talk about it more. People need to be aware of it because you will. As soon as you purchase a home, really any home, you take out any home loan, but definitely on the VA, a lot of lenders and companies, they can get that information because it's public record. Whenever you purchase property, it's public record, and they can get some information, not a ton, but some from credit bureaus, consumer financing reports, things like that. And they'll reach out to you soliciting business. and they will make their advertisements or their solicitation look like they are the VA or they're the government,
Yeah.
and it's time to refinance your loan. Call us. The VA doesn't lend any money. The government's not lending any money. That's just a bank that maybe they do VA loans, but they're trying to solicit you to call so they can get the business for your refinance. A lot of the time you will read those mailers and you look down at the bottom of the letter and here it says bank of such and such. So you just have to be aware of that the VA isn't going to reach out to you to refinance, neither is the government. I haven't seen that on my VA loan. They're just lenders trying to get your business. Best thing you can do is, by all means, if you see something, you can call them. They're just a bank.
Yeah.
You have a current bank that you're using for your VA loan, and maybe there's some other banks that you trust that you want to reach out to, but it's important that veterans and service members know that those are solicitations. And they really do push the boundary on making themselves look like they're an official government organization to try to get people to call in. So be aware of that.
Yeah, the lending name is often has a very official look or feel to it. They use emblems with eagles on it.
Yes.
Or it'll say RE or attention and the name of your lender, and it might have a number on there that looks like your loan. So they're trying to make it look official. Please be aware of those when you open them. Now, some of them often will say, you can tap $40,000 of equity, by contacting us, or you can pull this much out. So it sounds like what they want you to do is refinance and maybe do a cash out refinance.
Yeah.
Now, I know you can do a cash out refinance, and we can talk about those letters, the solicitations, but how about we talk, obviously, just the mechanics of it. Let's say I want to refinance my home.
Uh-huh.
How does that work if, not just the Streamline, but let's talk cash out refinances. What is a cash out refinance? When can I do it? What are some of the reasons it might make sense to do that?
Yeah, no, that's a good question. Be it a Streamline or a cash out, whenever you refinance, the current lender is going to be paid off in full and a new loan will start. You can do it, like I said earlier, you can do a 30-year term again, a 20 or a 15, but that old loan, the original loan, will be paid off and a new one will start. And that's probably why you had to go meet with a notary, because you're officially ending one loan, starting a new one. On the Streamline, you're not taking any money out. We're not paying off any other debt. It is simply paying off the original VA loan. On a cash out, you may not be actually pulling cash out. It's just an industry term. It means we're doing something other than just paying off your original mortgage. Maybe we're paying off other bills, a car loan, high interest credit card debt, or any credit card debt. You could be pulling cash out for a family or life event. You could need to do home improvements. You can use the equity of your home like a savings. Mm-hmm. And banks, lenders will solicit you for that business as well. They're like, hey, rates are lower. Let's see if we can lower your current interest rate and pay off some other debts you might have. Looks like you have X amount of equity in your home. We can use that to do some of these other things. In some cases, there's some soliciting going on that maybe that lender doesn't really have your full information. It's just, here's what the internet says your home is worth, and here's what it looks like you bought it for, and we're going to lob out a solicitation. But in some cases, a cash out will make sense for people. I've done cash outs where the guy needed funds to help cover his daughter's wedding, and he could reduce his interest rate on his current mortgage. So he's like, I'll just do both of these things at the same time. Or if you do need to pay off some high interest credit card debt, whenever you put it into your home loan, the interest then becomes a tax write-off. Mm-hmm. So instead of borrowing money on an installment loan or a higher interest, typically mortgage loans have a lower interest than those other things because they're tied to property pretty securely. So in many cases, if you have goals like that, it makes sense to at least look into if you need to borrow money, and if you have equity in your home that you could use as a savings. It's worth looking into a lot of time if you have goals like that.
Yeah, so it sounds like it's a good opportunity, especially if you're going to remodel your home, for example, or say maybe you have some medical bills or something that you just have to pay off.
Yeah.
Consumer debt, that's where it starts getting a little tricky, right? So maybe paying off high interest credit card debt is a good idea because you might be paying off something that's 20% interest rate and locking it into a much lower rate, but it's then attached to your house, right? So now you're locking in this long term, you're stretching
Long
out
term.
for
Yeah.
15, 20, 30 years. So if you're going to do that, I really highly encourage you to think about what got you into that situation to begin with. So
Yep.
if you're doing some financial practices where maybe you that was your only option, okay, can you change this going forward so you're not going to take out new credit card debt, right? So don't use that as an excuse to wipe the slate clean and then run up the debt again, right?
Oh, I love that you're looking out for veterans there. That it happens a lot. It's you do need to be aware that when you tie something into your mortgage loan, it's going to be on that mortgage loan for the length of that mortgage loan. You know, we take something maybe we could have paid off in 5 years. Well, now it's on a 15-year VA loan. And maybe it saves you on your monthly bills, but over the over time, you're still paying more on your than maybe what you're paying currently on your current mortgage. So those are things to consider. And I do see, unfortunately, folks will pay those debts off. We'll wrap them into our mortgage. We're going to pay on that for the next 20, 30 years if I stay in the home. But then I go use the credit cards a whole lot more because they're paid off, and I can do that. So you are right. Take a look at what's causing that to begin in the first place.
Yeah, for sure. So let's say there's a situation where it does make sense to do a cash out refinance. Maybe it's remodeling the home or building an addition on it or whatever that might be. And that's going to not only improve your quality of life, maybe it increases the long-term equity that you have and the valuation of your home.
Yeah.
So it sounds like a win-win situation. What are some of the mechanics or some of the details we might need to consider before we can do that cash out refinance?
Yes. So another beautiful thing about the VA loan, just same as with a purchase, you can do 100% financing much of the time. So by that I mean when you purchase the home, you don't have to put down any money. Most lenders will go up to 100% of your home's value on a refinance. So you can tap into a little more equity than a lot of conventional or FHA loans will allow. That said, it's typically up to the lender of how much of that percent do they want to lend in cash, or is it we can go up to 100% if we're only paying off debt or paying off your current mortgage. So those details are often up to the lender and what those guidelines are on top of the VA guidelines. But there's still no private mortgage insurance. So a lot of conventional and FHA loans, I'm not knocking those loan types, but one thing that's different between those and a VA loan is VA loan doesn't have private mortgage insurance. And on average, that's going to save you $150, $200 a month every month. Even if you go up to, say, 97% of your home's value, you don't have to pay that. Interest rates on average are about 0.25% to 0.4% lower than a conventional loan, so you save a little bit there. So just the benefits are still there if you do a refinance, and those are really the mechanics are you're still going to have to, if you're pulling out cash, have the home appraised because we need to make sure that home is worth what you're trying to borrow against. You have to do that again, and you will need to prove your income to make sure if we have a new loan paying off this other debt or if we are pulling cash out to do those home improvements, I need to show that I still have a job or I still have income coming in where I can make that payment. A lot of the things you did when you purchased the home, you'll need to do on a full documented refinance like that. So I would just prepare for that. Now, hopefully going into it, you know what you had to do to buy the home. You know you're going to need, say if you're working, I'm going to need pay stubs, I'm going to need my taxes, proof of assets, I'll need to get the home appraised, the lender will need to do title work. I mean, if you know that going into it, you can pre-plan and you can have everything ready to go and it can go a lot smoother.
That sounds good, and it's good to differentiate between the Streamline Refinance, which is a minimum document requirement, and you can pretty much just do that. Mostly I did mine over the phone other than having the notary public come out for me to sign everything. But it sounds like this the cash out refinance is a little more involved. It's almost like buying the house again. Yep. You're just changing how much money you have in the house. So if I'm going to do a cash out refinance, are there times where it does make sense, like there's a positive use or a good use case for the cash? And are there times where maybe it's not in your best interest? Maybe we could look at pros and cons of actually doing a cash out refinance.
Yeah, that's why I like to talk to subject matter experts, people I can trust, banks, lenders I can trust, and I have them put together some proposals for me, given what my goals are, what my situation is. I mean, the first thing I would consider is, am I dropping my interest rate? Do I want to tie all this other stuff, even the home improvements to my home to this interest rate that is now currently being offered. If it's a higher interest rate than I currently have, well, maybe I don't need to lose my current interest rate on my current loan just to borrow $10,000 for the DAC on the back. Maybe I could do a second mortgage that I can pay off in 5 years and not start over on a 30-year loan. Maybe you could do a home equity line of credit, right? All of those things, the interest is also a tax write-off. You'll typically get a little bit lower interest rate on a first lien mortgage, your primary mortgage. But if the dollar amount is, say small enough that you don't need to tie it into another 30-year loan or a 20 or 25-year loan, and you think it's something you want to pay off in 5 years, I would look into either using savings. Some people borrow against their 401k if they have something like that, and that's a whole different ball of wax.
Yeah.
But you do have second mortgage options out there, not under the VA, but you normally can pay those off quicker, or a home equity line. So I would consider all of those things. But typically, if I can better my interest rate than what I have now on my first mortgage, it's not a requirement, but it's nice if you can, and achieve some of these other goals, I'm going to explore that.
Okay, so it sounds like it's going to be very situational for each individual. So whatever
Yes.
your situation is, what your goals are, and this is where talking to your lender and walking through different options might open doors to different opportunities or different options for the financial instrument that you're going to use.
Yes, and that's why it's important to get somebody who's reputable, someone or at least that you trust. There's also break-even points on, especially a full doc loan. A title company that does that title work, they have fees for that. Then you got to pay for the appraisal, lender fees. What's the break-even point? If I'm trying to save money, how long will it take me to recoup those costs? So if the break-even point is over X amount of months or years, is it worth doing? Maybe you're going to move in 3 or 4 years. Well, if I'm paying that much in closing costs and I won't recoup those costs back, or maybe I barely do before I might PCS or sell the home and plan on moving, is it worth doing all that and starting another long-term loan?
Yeah, that's a great point. That's something that we ran the numbers before we did our refinance, and our break-even point was usually short enough that we knew it made sense. But sometimes with closing costs, especially on the full doc loan, it might not be worth doing that.
That's right. Yeah, you need to look at that and the numbers banks are putting together. It can look hefty when you look at it all together. They have to disclose all those fees together, but just keep in mind you've got other entities, your county courthouse, the title company, the lender, the appraisal. Oftentimes, because on a VA loan you have to escrow for your taxes and insurance, which means you must put in your taxes and insurance that are due for that property into your mortgage payment. Whatever is in that escrow account, whenever you say if you did refinance, that gets refunded to you because that original loan is ending. But they have to hold out funds in the new loan to restart up those escrow accounts. So it looks like a lot on paper, but really it's a wash. You're getting your other escrow money back within, I think it's 30 days, but we have to set up the new escrow account. So I remind people of that too. That's your taxes and insurance that you're going to pay anyway. So I wouldn't let that, if it is a few $1,000s, just know that whatever you're paying in escrow now is going to come back to you. But it's not to be taken lightly. You want to not only look at options from lenders, but just make sure it's something you want to do, and you have options of how you go about it, right?
Well, very good. It sounds like we've covered a lot. So if you have a VA loan and you're looking at refinancing, perhaps into a lower interest rate through the IRRRL, IRRRL,
right,
or Streamline Refinance, I find that a little easier to say. You can reduce that interest rate. It's a or low doc form. It does not take much time or energy to do this. A lender can walk you through that process. We did it all over the phone, and it was great for us, for my wife and I. Now, if you need to refinance, do a cash out, it's going to be a full doc loan. There are associated costs with that, more so than there would be with the Streamline, and you really need to look at your options to make sure that's what's right for you. Does that cover it? Is there anything that we missed in here?
Yeah, not just what's right for you right now, but think years ahead, long term. Is this going to be the best decision? And information is power. You have lenders out there that really do care. Just like us sitting here talking about this as veterans ourselves. There's a lot of good information out there. There's also a lot of misinformation out there because sometimes lenders have certain guidelines that are different than the VA's. So when you talk to a lender about their guidelines, it might be different than another lender you talk to because they have additional ones on top of what the VA has. So do your research and just know that you have options. The VA loan is an amazing benefit, amazing tool for your tool belt, if you will, in life.
Awesome. Well, Ryan, thanks for sharing this with our audience. And for you, thank you for tuning in and thank you for your service.